questions about the valuation capability, which is fantastic. We'll talk about that. We'll get into some dialogue around the market, and then we're going to share with you, some examples of how Ben has helped his clients achieve wealth through a property. Not just because we're chasing yield and growth, which we all want, but it's about making sure that it's the right investment for the right client at the right time to support their strategy. So Ben, a big welcome, and Ben's also flown over from Western Australia to be with us this evening. So we're really grateful for your time.
No problem. Glad to be here.
Thank you very much. So Acumentus. Acumentus is an ASX listed valuation company. Now, don't quote me if they are the only ASX listed company. Last time we checked they were, but that may have changed over time. But if I think about cycles and I suppose operating over time, over 100 years, the business has been operating, providing valuation capabilities to support quality investments at both a corporate, institutional, business and individual level. The best way to describe what does it mean to have a valuation license or be a valuer, if you think about when you go and commence your loan process and a valuation is being conducted on the security that you're looking to acquire. From a commercial standpoint, it's highly likely that Acumentus, and in particular in Perth, it might have been Ben who's actually walked through that asset and provided that valuation to support the decision on whether we are going to fund that particular deal or not. So that's a bit about Acumentus. You can look them up as well, but again, probably give us an indication of the type of partners and capability that we at XIN work with and provide our clients access to. With that being said, I might throw to Ben as a bit of an introduction and welcome. Ben, that's Acumentus, but who's Ben Lammers? A bit about you would be great.
So I'm a licensed valuer with Acumentus, been doing it for about 25 years. Current role is Director of Advisory, which encompasses doing commercial, residential, specialist assets in purchasing for clients. So the role is to ascertain, analyse and seek out the right assets for clients to do a purchase for them. And we use our valuation skills to go out and analyse and find the right asset. So that's what we do.
Fantastic. 25 years?
Yeah.
Long time?
Yeah, long time. We've seen a lot of cycles go up and down. So, we can get into cycles, but always real estate is always about long term.
Yeah. Seeking
long term. If you're after a quick dollar, quick turnaround, property is probably not the deal for you.
Yeah.
So today we're really going to be talking about, the best type of assets, the different asset classes, and talk a bit about the West Australian market for those who are interested, as an opportunity to see if there's any opportunity, because we know the West Australian market is doing very well at the moment and will continue to do so for the next few years. So an opportunity for the people here to get an insight as to what it's doing and an opportunity to maybe to invest in that market.
Fantastic. And I think it's a good segue, Ben. The purpose of the slide of what you're seeing here is again, it goes back to how I opened the conversation. It's about making sure that our clients here at XIN have a dedicated team behind them to secure the right assets that support their strategy. So Ben, I suppose, from a property partner point of view, it'd be great just to get your insight through your experience, just around the importance of having, through the lens of the investor, having both, a property expert who's going to support you with the acquisition today but support the growth of tomorrow, as well as working with the trusted partner, being the broker or Jocelyn in this case, and how that has been successful for your clients over the journey.
Yeah, I guess that from the, it's not just about being a buyer's agent, about finding a property. That's only part of the whole solution. Dealing with XIN and also other property brokers around the country, it's about creating that relationship where, getting a loan is one thing, but getting the right asset that you can continue to hold over the long term is imperative to get it right. So we're using our valuation skills to not only negotiate, find the property, act on behalf of the purchaser to find the right asset, but also be independently told the good and the bad about a property. That's important to know what you're up for.
Yeah.
But the other services that we provide as well is the opportunity to have someone in your corner when you're buying a property, that you have that long-term relationship with the person in Western Australia, like ourselves, to act as an asset manager, to be your eyes and ears, to look at that asset, to see if you've got the right lease in place, the right tenant. You know, if a property manager is looking after it, are they doing the right thing by you? Are you being told the truth? Is a rent review a good thing? Or is it taking up the option going to be the best thing for the tenant? Or in the long term, is it something that should be looked at in terms of increasing the rent? So there's more than just buying the property. It's holding the asset and looking after that asset in the long term.
Yeah, absolutely. And then Jocelyn, I suppose equally from the finance side of things, knowing that your clients you're working in unison with that trusted property partner, like how have you observed that to be successful for your clients as you support them out the journey?
Yeah, especially for commercial loan, it's very different from a home loan. You can just, some of them sometimes they just can go into a bank, get a pre-approval, but as for commercial property, you can't really get a pre-approval. There's no such thing as a pre-approval for commercial loan because every asset is different. So working with like professionals like Ben, he can really give us help the clients on the property buying side and also gives us confidence of, okay, he said it's good asset, then we really trust his words, So so then we just do a whole package together, working together.
Yeah, great. So confidence.
Yeah.
Fantastic. Thanks, Jocelyn. So I know as guests have walked through this evening, the first thing they've asked is, who's the valuer or where's the valuer? But not everyone may know what exactly that means to have a property partner who has a valuation license and capability. So Ben, it'd be great for you just to talk through what does it actually mean, the advantages specifically, being a licensed valuer, acquiring commercial real estate on behalf of your clients.
Yeah, I guess from our perspective that we're using our valuation skills to add value to the whole process. I mean, there's not many licensed valuers who are buyers agents as well that provide a wider scope of advice. So you can order a valuation and they'll tell you the number and what the rent is, and there you go, you put in the drawer. But what's the market like? What are the growth prospects? What is that industry like? What's the strength of the tenancy? Is the tenant in the market, say if it's a service industry that might be quite niche, what's the danger of that tenant leaving and not getting another tenant? Because you don't want a commercial property that's vacant. So using our expertise in what the market and the experience, because we've worked in the market for so long, we can work out, and like nothing is perfect in life, and we don't have a crystal ball either, but we can minimize risk by, are you aware of that section of the market is having difficulties, it's headwinds. So that type of asset will only attract that type of tenant. It's probably best if you stay away from that. So that other strategic advice is something that we add that a pure buyer's agent probably just couldn't do. It's the expertise around the other things that impact on that asset that is worthwhile gaining.
Yeah.
Absolutely. Anything you'd add, Jocelyn, from a finance point of view, knowing that that level of detail is being observed and acquired pre-approval to an extent for your clients?
Yeah. Actually, Ben has mentioned all the things that what we lenders.
Sorry about that.
No. Thank you so much.
Okay.
So we, as lenders, the banks, they always look at what the valuation report very thoroughly. So not just numbers. So to have someone that has the valuer qualification as a buyer's agent, they already know. Okay, they actually a commercial valuation report is actually like 40 pages minimum. So it can be. Some of them can be even 100 pages. So they go through so much detail for you in a valuation report. So having a valuer qualification buyer's agent to be able to help you, they will go through each of the nitty gritty things and let you know whether about this property really helps us brokers knowing that our clients are getting a good property, and which is a property that the banks love. Yeah.
Absolutely.
Yeah.
Because it has to meet that financial criteria.
Correct.
Because all the fundamentals that a bank looks at, we look at anyway.
Yeah.
So you don't want to have, particularly as a broker, you don't want to be having, I got a deal, here's the offer. By the way, it's been accepted, but there's all these things that are a problem with it. you know, your client's going to be unhappy.
Yeah.
The loan might not go through, or if it does, you end up with a sticky asset.
Yeah.
No one's happy.
Can I add one thing? I have clients that have bought a commercial property and then the valuation came back very bad.
Oh, yeah.
So that's why I always encourage my clients, okay, have you spoke to a professional buyer's agent or a property partner, you know, so that they don't make the wrong investment. Yeah.
And also talking about banks, do the banks have their own valuers as well, or that you can that a client can use their own as well as I know sometimes the banks will tell you who the particular list of valuers. Is that still the case here?
Yeah, actually the banks do have their own panel, but actually Acumentis are on one of the banks.
Oh,
or the big
well,
four.
that's good.
Yes,
That's
yes.
good.
So
But just on that,
Mm.
you know, if I'm purchasing a property for a client and I've done all the analysis and I've made a recommendation and we purchase the property, I can't then go and value it myself for the bank because that's a conflict of interest.
No, right. Okay.
You know, so that doesn't work.
Yeah.
You know, because then I'm just marking my own homework.
Yeah.
That doesn't work. You know, it needs to be separated.
Absolutely.
So someone else or is another?
Yeah, well,
Yeah.
we would say, look, go and get. I won't mention other valuation companies because
Yeah.
they're second rate, but you know they can go and get it done independently, and a bank has a whole panel.
yeah,
Right.
yeah,
But
Yeah.
whatever they see, we should have seen already.
correct.
Great question. Thank you, Jocelyn and Ben. So we're moving into Western Australia. So I think, as someone who lives in the Eastern Seaboard, heard and felt a lot about Western Australia
Yes,
last year.
I
And I'm
did.
not sure if everyone else can attest to that. And, when we, again, the way we sort of opened up the conversation was about making sure all of our clients are aware of what's happening nationally. So you can't talk about what's coming up, what we foresee is coming up without reflecting and talking about what's happened. So Ben, someone who is in the market, been in Western Australia for 20, 25 years, I don't know whether you've seen years like that before from a real estate perspective, but it'd be great to get your reflection on what actually happened in Western Australia last year and some insights as to what was potentially driving the housing boom that we all saw and felt. And for those who may have invested, may have reaped as well.
Well, I guess if you're comparing booms, 1988 was bigger.
Yeah, okay.
No, that was like 50%.
Yeah.
And then it collapsed in 1990. Right? And that was a debacle. Well, we don't want that because that just hurts everybody.
Yeah.
So it falls off a cliff. And to be truthful, Western Australia has had a bad reputation for that because of the way it was managed. But all those past idiosyncrasies about that economy in Western Australia have all been washed away. And so, this divide between Western Australia and the Eastern States, it's a thing. It's a real thing, where the Eastern States would view Western Australia differently, as do West Australians view the East Coast. It's a two-way street. But, and we're not here to make comparisons about whether this is a better market than Sydney or Melbourne, because every market has its strengths. But this is an information session about what West Australia has to offer in terms of fundamentals of what it can deliver for investors. And that's all we're interested in. And I bet you it's about capital growth, rental return, security, and making sure that asset is looked after. So they're the things that we need to tick off. So to that, when you talk about the West Australian market, it's the only state that has a surplus. Right. So when you talk about the drivers, what makes a market better than another, and it fluctuates. Okay, so New South Wales and Victoria are having a bit of a hard time of it at the moment, and they're spending like drunken sailors, or the state governments are. Where the West Australian government has been quite prudent in the way that they have secured the wealth. And don't say GST, we kept it all, because that's not true. We're still giving away a third of our GST to the other states to assist. But the delivery of the income and royalties that West Australia's delivered has become a more diversified economy. So when you talk about iron ore, everyone says, West Australia is just an open mine. it's just a pit. They dig out minerals. Maybe, but if you think about iron ore, that represents only 22% of GDP, which is a small amount. Precious minerals, lithium, battery production, gold, pink diamonds, nickel, all that type of stuff with the technology that's growing through China and through Southeast Asia is phenomenal. So the demand for those type of minerals is huge, and West Australia is in the forefront of that, and that's delivered in the just the financial numbers that you see that West Australia's delivered. It's got the lowest debt in the country, which is less than 30 billion. We're a surplus of, 2 years ago it was 6 billion. It's a surplus now, it's down to 3 billion because we just bought a new train set for the state. So, there's a lot of things that are good about the economy, and our debt level, in terms of interest repayments, is the lowest in the country. I saw a stat the other day that New South Wales, their interest bill alone is $1 million an hour. So when you talk about the costs, and they need to deliver that somehow, so that's passed on to people who are like investors yourself, property taxes, levies, tolls, you name it. It's an impost on those who are looking to invest. The property tax that's being charged to eastern states people is phenomenal. Almost like property has become a dirty word because of the costs that are increasing. It's becoming difficult to deliver a return. So West Australia's got lower stamp duty, doesn't have the large taxes associated with it, but what it has got is fastest growing population in Australia with 3%. Okay, we've only got 3 million people, but it's still the highest population growth percentage-wise. 100,000 people coming into the state. So, and then you look at the numbers alone in terms of just houses. There should be 12 to 13,000 properties on the market at any one time in any given month. Currently, there's only 4,800. So the supply is really low. So the issue is a supply issue. There's high demand, population growth, leveled with investors from eastern states coming over because the median house price is $750, and the commercial properties, you can still get good properties for under $1 million that are delivering good returns of 6-7%. So, and then you've got the business is growing as well. We're short of employment. We've got the lowest unemployment rate in the country. Rents are growing all the time. There's a lack of supply of industrial property to develop. So if you look at all the fundamentals that drive a market, we've already seen what the result is, a 23% growth in the residential market, an expected 15% growth in the overall market this year coming up. And that's not even without an interest rate rise. A lowering of interest rate. Whether that happens or not, I don't know. But even without an interest rate reduction, there's still very strong growth, and the fundamentals are still very, very strong for Western Australia. So we're here just to talk about Western Australia as an alternative market to consider.
And with that being said, there's a lot of positive indicators there that speak to the fundamentals. So then, if I then apply a different lens, Ben, like it goes back to, I suppose, when it's the eastern seaboard, geographical challenges, or I'm an overseas investor, I think most investors are really comfortable in buying a residential property that they will never see, but commercial might be different. So from an Acumentus perspective and your service and expertise, how do you give confidence through your services around not just identifying the right asset through strategy, but the ongoing management?
Well, I guess in terms of services, it's not just as a buyer's agent, got the property, shoot the fish in the barrel and move on, right? So we're interested in a long-term relationship with clients, that we buy the asset, we do the rent reviews, we can do insurance valuations, we can do depreciation replacement costs, we can do strata valuations, we can do all sorts of stuff, and also the asset management, like doing checking out the whole asset in terms of what the risks are, a bit like your broker when they do a check on interest rate.
Yeah.
Are you with the best bank?
Mm.
You know, that portfolio review is something that we can all look at. So you've got someone that's in the state who knows the market, who can look at the asset and give you the truth about what that asset is doing.
Yeah, fantastic. Yeah, awesome.
So that's a separate service, right? It sounds like on top of
Well,
the.
you know, everything else,
Absolutely.
but you know, so there'd be a fee for the purchasing of the property.
Yes.
But if you needed a rent review done,
Yep.
we could charge a fee for that. Or if it's asset management, like if you have a property that is in a specialist industrial area, there might be a property manager that might, and it'll usually be a junior, I guarantee it, just looking after that asset, collecting the rent, checking out the vacancy, looking for arrears. But who's looking at the whole asset in terms of what the market's doing? Is there headwinds coming in the economy, which could be a risk for vacancy?
Yeah.
Should you offer a rent-free period on the next negotiation in order to secure the tenant? Because if you miss out on that tenant, you have to get another one in. It's advertising, it's a leasing fee. You know, are you better just to trim the rent by 5% in order to keep the tenant, to reduce the vacancy? A property manager don't know whether they're going to give you that. It's the strategic strategy of the overall asset that we look after.
So Argumented don't offer property management service, you offer
Asset
management
management services. So we're a set of eyes overlooking the day-to-day management. Because as you know, not everyone can be in the state, but having eyes and ears on the ground of someone that you can trust who's independent, acting in your best interests is important. And really, real estate should be, as an investment, an unemotional event. Do not get emotionally involved with your asset.
Yeah, absolutely. Which is a good. Sorry, Joe.
Yeah, I was going to also ask you, in terms of investors in Perth, what's the percentage of people coming, interstate investor versus local investors in terms of commercial and residential?
I couldn't give you an exact percentage,
What's your
but
estimate?
well, I'd be guessing a number. But what I can say is that there's been a vast increase in the interest of Eastern States investors into the Perth market, simply because of the economic fundamentals that make it such a strong market. So there's a lot of interest. And, you know, a lot of it has been in residential, because residential is a broad asset. Everyone needs to live somewhere. People can understand that asset. But a commercial asset is a bit more sophisticated, and I'm sure the valuations and the criteria that a mortgage broker needs to go through is very different. So it's a little bit more intricate, a bit more expertise involved in buying the commercial. But we are seeing a lot of Eastern States and international corporate investors and funds buying into Western Australia as well, because they can see it being a very strong market.
Do they have the same type of taxes like stamp duties and purchases?
It's probably less. And they don't. Does Victoria have a property tax, or New South Wales have a property tax?
Well, it is a wealth tax, quite high, but I'm saying what's Australia? The government's stamp duty. Stamp duty is a tax already, but you know.
A stamp duty is a one-off, and that is 4.5%.
And you know, in Western Australia, for the commercial, I lived there for 8 years. So, commercial, you know, double brick. You know, most of the buildings are double brick. I know a residential is double brick. What, but in terms of like commercial, industrial, are they all double brick as well?
Well, commercial industrial is built a bit different. So it depends if you go to Kewdale, it's a brick metal dado, which is half brick metal, and then you've got a steel frame.
Right. Because it's the heat. Yeah, I'm talking about.
Not necessarily the heat. It was the cost of construction.
Right.
That's why they did it.
Okay.
And those assets have moved on, right? So everything is tilt-up concrete slab now.
Oh, okay.
Because it's
okay, yeah.
efficiencies.
Yeah.
You pour it on the ground, you tilt it up, you bolt it together.
Right.
And off you
Well,
go.
they're precast walls too.
Precast.
Concrete walls
Yeah.
on semi-trailer. Drop it on the concrete slab, and then put a roof on the roof. It's done.
Yeah, that's right.
Yeah.
But high-rise
so-
apartments are not common over there.
So I might just jump in. We're just
Sorry.
conscious of time. That's okay. We're going to have plenty of time for questions
Oh,
at the
right,
end, right? So, but thank you for
Sorry,
asking them. No, that's okay. But great questions, and just have them ready when we get to Q&A. So Ben, as you transition out of WA market,
Yeah.
it'd be great. This slide just talks about the key nuances around your process when, as a valuer, how you identify the right asset. It'd be great if you just touch on what this looks like on
Yes.
behalf of your clients.
Yeah, so, in the process, we got a client coming to us. The first thing we do is analyse what their criteria are. Do they want rental return?
Yeah.
Do they want capital growth? And what is their budget? Obviously, budget dictates what type of asset you can get and whereabouts.
Yeah.
And, there's great assets at the lower end of the market and there's great assets at the top end of the market.
Yeah.
But there's a lot of rubbish in between.
Yeah.
And so a sales agent will only tell you the good things about a property. A licensed valuer who acts as a property advisor, acting on your behalf, will give you the truth, the good and the bad, and make a determination as to whether that's worthwhile purchasing. So we would write up the offer on your behalf and go head to head with the agent to get the best deal possible.
Would you charge a fee for that?
Yeah.
Of course.
That's why you're here.
That's right, exactly. I know.
So we've heard a lot on the asset side.
We can talk about that later, but
So great context, economy, market, assets, and I know there's a bit of interest around. Is there a specific asset or industry we're looking at, which we'll ask in a moment. We'll park that. But as equal, the funding side's really important. So Jocelyn, for those who haven't bought commercial real estate before, have an interest, can you maybe just touch on what does that loan or lending process actually look like?
Yeah, so as I mentioned earlier, for commercial lending, for a commercial loan, we don't generally give out a pre-approval. Like when you want to buy a house, you get pre-approval because every house is the same.
Yeah.
But each commercial property is very different.
Wow.
So when let's say when a client comes to us, they normally get a sense of, okay, they will have an asset in mind.
Yeah.
They'll have an asset in mind so that we can tell them like what's the LVR, we can do a calculation for them, but of course they will be subject to valuation, all these other criteria. So the process, let's say that, okay, they're comfortable with the calculation, then that's when they make the offer. And then that's when we start the process, getting them approval and then order a full valuation, go through settlement. Yeah.
Brilliant. Thanks, Jocelyn. And again, I suppose how that sort of unites in with a property partner like Ben and his business.
Yeah, so actually for people who get valuation, not generally, they're not for property purchase purpose. Some of them can be, they have existing properties, they just want to, do valuation to update their balance sheet. So apparently for self-managed super fund, they need to get a valuation on their commercial property every 2 or 3 years.
Yeah.
So that's when they need to get a valuer, and then some of them, they will, for example, they want to buy a huge asset, then they want to do some due diligence on the property, they will engage a valuer. And then when they want to apply a loan, we need a valuation. But it also for future planning, like if they have a portfolio of assets, they want to see how their assets is performing.
Yeah, awesome. Totally agree. Thank you, Jocelyn. All right, so here at XIN, we care about helping finding the right strategy for our clients' needs. We can easily show you assets. Ben can show you examples of real estate that we've purchased for clients, but the reality is those assets are meaningful to them. It may be what you want to get in the long term, but there's a way in which we get there. So we thought we'd talk about some common scenarios of investors that they face when they start to embark on an investment journey through property, and we're going to put Ben on the spot around those scenarios and how they may have tailored to some of his clients in the past. Ben, I'm going to pose the first scenario to you, which I think would be pretty common to either those in the call or just the general investor out there. So investor, first time, looking to get into commercial. I already have an existing residential portfolio. Whether I'm ready to retire, I'm more thinking about how can I get to let's say, financial freedom in the not too distant future, and I'm looking to explore commercial real estate. It'd be great to get from you, you know, a scenario that you may have faced when a client's presenting with that type of profile.
Yeah, without naming any names, but we've got a couple of examples coming up, you know, with a client who's, you know, early 50s, looking to set up, worked as a vet, earning good money, looking to invest in a commercial property, had about $1 million to spend, looking for something in that space where it will give her a good return, and was obviously borrowing money to get it done. So it had to have a good tenant in it as well. We ended up buying a property, probably about 3 kilometres from the Perth airport, in a good light industrial area, picked it up for $1 million, and so had it rented out. So we did the leasing as well and got the lease done for the property on a 5+5 deal, and got it rented out. So that one was getting a good return.
Awesome.
So yeah, that's and she was very happy with that too. So that really worked.
Yeah, brilliant. Awesome. And we'll show that asset in a moment, but Jocelyn, maybe talk about that scenario too.
So as a commercial broker, so I recently assist a client who has several commercial properties in her portfolio, but she has never used like a buyer's agent or a property partner professional. So she has always just listened to a listing agent. Oh, this is good, you know, because it's in a good area, things like that. She bought a property. So we recently did a loan review for her. We did all the valuations. Unfortunately, the valuation has come back very bad, like very low, and we were very shocked. And so, but she in the future she knows she has learned her lesson, and then because her goal is still to expand her property portfolio. So she now determined that, okay, I'm definitely going to get a buyer's agent to help me to make the right decision. Yeah.
Right. And in that scenario, Ben, an asset that you've looked at for that type of client?
Oh, you know, there's what in terms of it falling over.
Oh well, when that client's been received at the point of falling over.
You know, and sometimes when you've got clients referred to you like that, it's really changing the mindset of the client. And it's not that they're unintelligent. Most of the clients are super intelligent. They're very good at what they do in their expertise, and their field of expertise, they are very, very good. But in a negotiation or property sphere, just because you're intelligent doesn't mean that you can pick up all the other nuances in the industry. So by getting an expert on board, it allows you to redirect their view of what they should be looking for and get them into the right asset.
Yeah, that's right.
You know, so you're working with that client because the client ultimately has to trust you.
Yeah.
If they don't have trust in you, it's not going to work. You know, because they have to understand that we're acting on their behalf to get the best asset possible.
Yeah, totally. And then with that being said, Ben, so we've got the assets that are being purchased for those clients up on the screen, and you know, I know you're really proud of. It's not about what we're buying today; it's about the performance of the asset over time. It'd be great if you could sort of speak to some of the results that these clients have been rewarded with.
Yeah. So the one on the left is office warehouse. That is, you know, just a couple of k's from the Perth airport in a light industrial area, close to the rail, close to the freeway, good access. That one we leased out within a week. So that current yield is 6.4%. That was a great return. That's a net return as well, bearing in mind that commercial property is a net return. Outgoings are paid by the tenant. With residential property, it's a gross return where the landowner or the property owner pays for the rates and taxes. So, you know, the great returns, good strong lease, good strong tenant in a great area. So she's really happy with that, and it's had some good growth over the last couple of years as well. And the one on the right was purchased for a self-managed super fund, and they were running around, what about this? What? No. I think you need some advice. And so they finally took the advice, and we got them into a property which is in West Perth, which is a office suburb, probably less than 2 kilometres from the Perth CBD. And you've got to be careful with West Perth because there's a lot of character offices in there.
Oh, yes,
And they're no good.
yes, I know.
They're no
West
good.
Perth, not far from the city, right?
No, that's right.
King's Cross, just past
Kings Park.
King's Park, yeah.
Yeah, King's Cross.
Yeah, King's
So-
Park, because I used to live in Western on the other side.
Yeah, so this one here was an office, leased out for 5 years, getting a good return, you know. So, and that was bought in a particular point of the market where things were really starting to take off. So we took advantage of the market. So there's been really, really good growth for that. So I mean, you can see that, you know, those type of assets. This one was $1,050,000, and I think that one there was $580,000.
So,
So there, in terms of what you're spending in a commercial industrial market, it's relatively low in comparison to these estates.
yeah,
I'm sure you can get something equivalent, but you'd be a little bit further out,
yeah.
I'd expect, from the CBD.
We talk about Sydney, took about 30, 40 kilometres out.
Yeah,
No.
so
That's
you're
West
so
Perth, very
close.
close to the city.
Well, that's what I'm saying. These are close.
So very close.
Yeah,
Yes,
yeah.
very close. It's just
Well,
probably
that's
20,
miles away.
30 minutes walk.
So what I'm trying to say is that these aren't assets with two heads, right?
Yeah.
These are quality assets
Yeah,
with, if the tenant leaves, you have the ability to get another quality tenant in there. That's what you're about.
And long-term.
Security of tenure is what drives a commercial property.
Yeah, correct.
That's what you're after, and that's what we deliver, or we try and deliver for our clients.
so what type of tenants are getting, what tradesmen or exporting,
Um,
retail, wholesalers or,
The one on the right
Yes.
is a wealth advisor,
right?
and the one on the left is a service commercial who works for, he does industrial servicing of equipment.
Were they pre-tenanted already when you?
No. Well, I put the tenant in both of those.
So do you organise the tenancy?
Yeah, I organise the tenant.
You do assessment and,
And yeah, because the client was going, oh my God, you're going to buy a vacant property, how long is it going to take
okay, all
to
right,
rent?
you
I'm
get-
saying,
right,
look, trust me,
Right.
you know, if we buy it vacant, we get it cheaper
Yeah,
Mm.
and you can find.
because you get a valuer to look at that. If it's vacant, they'll say, oh,
Yeah.
3-6 months letting up period plus
Oh,
management
that's
fee
right,
plus
yeah,
leasing
yeah.
fee out the window. So it gets reduced as a vacant asset.
Right,
But by leasing it, we've added value. So now you have an income producing
right, so
asset.
it's worth more.
So you've immediately added
Value.
value to the property.
SM is if do you do many of those for commercial or
Yeah, that's the one. So
Yeah, one.
The one on the right was a self-managed super fund.
so
Oh,
so
okay.
you do quite
Yeah,
a
we
lot
do
of
that
those.
as well.
Right,
Yeah.
okay. And also retro clauses, do they apply to any of these commercial properties? Retro clauses?
Ratchet clauses can go in here,
Right.
retail not. You can't have a ratchet clause.
Oh, not in retail?
Not in retail.
Oh,
So
and-
a ratchet clause is just like a ratchet. You have a mechanism where the rent can't go
Yeah,
backwards.
that's right,
So with commercial industrial, you can.
sure.
Retail Tenancies Act in Western Australia doesn't allow you.
Oh no, I
To
mean
have-
retail here, I think
Yeah, yeah.
you can have it here.
Well, I'm not familiar with the
Yes.
state
Oh, okay, it's
legislation
in the,
here, but in Western Australia,
you can't.
you can.
Oh,
So is most of your leasing like for a 3-year term, 3% rise every year or CPI, something like that, or?
Well, if you get a good negotiator, they
Right.
can really ramp up the rents.
I know,
You
but
know,
typically,
You know, I had a fixed CPI rent on this one on the left, and
right?
CPI in Perth was 7%.
Wow.
Just-
So, I mean, those days are gone now.
I know,
But
yeah.
this is coming up for, there's another 2 months,
Right.
another 2 years to go, and then we will change
Right,
the
the negotiation's
mechanism.
another one, okay,
Yeah, so the
Right.
renegotiation.
okay,
But we took advantage of the high inflation.
okay, all right.
All right, just conscious of time before we get to Q&A, but so thank you, Ben, and again, the expertise and capabilities that you offer to our clients. We're really grateful of the special offer that Ben's able to provide to those who are in attendance today, both on the call and here in the office, about taking up your property expertise in acquiring real estate in WA. But it'd be great if you can sort of talk to what that looks like.
Yeah, so like in terms of the people who are online and in the office here today, we can offer a 10% discount on our buyers agency services. So, and understanding too that people might have lots of money to spend or a small amount of money to spend, but we can offer 10% discount on those fees.
So that includes looking for a property, proper valuation,
Find
a tenant.
an acquire to
Right.
search and find a
Yeah.
property for you. So evaluation, as you imagine,
Separate.
is separate,
Okay.
and they are slim fees. Let me tell you.
So
Valuation.
those properties, how much would you charge? 2,000 or 3,000 or more?
Well, in terms of a buyer's agency fee.
Yeah, yeah.
So
Just give me an idea.
that would have been 2% of the purchase price.
Right. Okay. Valuation would be what?
A valuation on that.
As a percentage or fixed fee? Or?
Something on that would be about $2,500.
Yeah, that's typically it's a 2 to 3.
Yeah.
Yeah, I would expect that. Yeah, yeah. Fixed fee. All right. What about depreciation schedule?
I don't have the scheduling. From
Did you produce that?
we do depreciation
Yeah, you do.
schedules.
Okay. All
Yeah,
right.
and self-managed super fund valuations as
All
well.
right. Okay.
They're a bit cheaper because a self-managed super fund valuation is an abridged version. They don't really provide all the information.
Sure.
It's basically to satisfy
Requirement.
the legal requirement.
What I'd suggest is, so like as you can see on the screen, this is a 10% discount across all the services Ben will provide. So this is the property advisory you're getting through
Right.
Ben and the business. So if you are interested, QR, for those on the call, QR code, and then we'll chat to you about your circumstance and how we can support you. For those in the room, obviously, happy to chat offline, and then we can have those specific discussions there. But yeah, feel free to scan that, and we'll be able to support you. And yeah, again, very generous on your behalf, Ben, to offer that to our clients.
Yeah, so no, we're just looking for Q&A.
Yep, awesome. So with that being said, we're open for Q&A on the call. If you have any questions, please log them. But open to anyone who may have a question.
So I got a question.
Yeah.
Is there a way to draw out the equity, like the growth, the capital growth from the commercial property similar to the residential property? As in that when you know how after it appreciates, they do a revaluation, they do a refinancing and stuff like that. That's rare for commercial, right?
You mean like when they want to do an annual review of?
As in that I want for people to be able to access the equity growth.
To leverage and extract. Yeah.
But those two examples, they're not new, are they?
They haven't sold, right?
Huh?
So
They've been sold, so you've got history of past sales.
no,
You
they
can
haven't
look
been
up.
sold.
You can look it up.
No.
You can look up on the web. That's property.
It's okay, we'll just let Ben.
Yeah, go.
What ask?
Well, I'm not. I think that is a
More of a
finance question that you're asking, isn't it?
No, like
Well, I'm just wondering whether in commercial property markets,
Mm.
because I have several myself, but I never try to
Leverage equity.
usually the only way you can kind of tap the use is after you sell, right?
Mhm.
Unlike commercial residential, typically one of the strategies that leave it for 7 years, you double your price. I'm just going to draw out equity so I could use that as a deposit, right? So you get to tap into the residential
Yeah,
like that. Can you do the same thing for commercial?
Yes, you can. Yeah,
So you just have to come back to, for example, XIN as a,
Yeah. correct. And then we
It's
will,
collateral, that's all.
firstly, we'll just do a revaluation of the property.
Yeah.
We'll see how much is thrown and how much equity you have.
Right.
Then we can do top up, cash
Yeah.
out.
Yeah.
Yeah, depends. Some of them from property, you can, well, generally commercial is up to 70%.
Yeah.
Yeah, but case by case. Again,
so you can
yeah.
still refinance.
Correct.
Yeah,
Correct.
Oh, yes.
But on a proactive basis, like that's kind of part of Ben and the advisory team services, that they'll proactively reassess your the asset in conjunction with your broker to assess whether there has been growth, and you may have a point in time where you want to see if you can explore the leverage, and that's where obviously the broker's expertise.
Yeah, sorry, and I'm aware that's not Ben's area. That's not not to do specifically with the buyer's agent, but
Yeah.
I'm sure that question.
Yeah, but going back to the growth, capital growth, those properties are not new, is that right? They're not brand new.
The one on the left was. That was
That's
brand
$1
new.
million. One other one on the right is
The one on the right, it's probably still looks modern.
Yeah, that's what I'm saying.
I think it's 2012.
So there is history of past sales, so you can just give an idea what capital gain is like over the 5 10 years we'll have all.
Yeah,
So that, it's obviously not hidden, so
yeah,
that'll give you an idea, like
but there's been
potential.
and like markets change.
But I can't believe the price is being so close to the city, but compared to Sydney,
I know it's hard to comprehend
I know.
because it's it's a different market.
different
Perth,
market.
Perth is a smaller market. We've got
Smaller.
3 million people.
Yeah, no, but still,
You know, Sydney's got what, 8.5?
yeah,
So it is a bigger market,
yeah,
but we look at the fundamentals.
Right.
You know, is the market strong? Is it robust?
yeah.
Is it growing? And can it be supported by economic fundamentals? It's yes to all of those answers. So it's just another market to consider.
Yeah.
And I'm not trying to say that WA is better than other markets. It's not, but at the moment it is. So if you're looking to diversify, it's value for money, it's affordable, and it's on a growth trajectory.
We don't have any questions on the call yet, so please feel free to log your questions. But are there any other
I have a
questions?
question.
Of course.
So in the first slide, it says the vacancy rate is about 20%.
Uh,
How
you-
did you manage to lease within 1 week?
Well, I think you look at that slide,
It was the market
Oh,
forecast.
it's the
sorry.
market forecast. Now that
The bottom left,
bottom left,
CBD vacancies
Yeah,
goes
so
into
that's-
20%.
the central business district.
Right.
So
that is-
that is a bit like, you know, the centre of Sydney.
Yeah, that's also.
Right, so
Mhm.
it's high-rise office towers,
Office.
etc.
So
So that market has been sticky.
Yep.
Right, but as I explained to someone else just before the presentation about suburban offices,
Yeah, suburban
is a
compared.
different market,
Yeah.
and there's more an appetite
Yeah.
for smaller businesses to go into. So that market's actually strong. So it's a bit of a different market in terms of CBD and suburban office locations.
Thanks.
Great question.
And what about retailing? Do you do much in the way of retailing, or not? Small, mainly offices and industrial?
If you were going to pick a market
Yeah.
that was probably not as strong as all the others, I would say retail.
Retail.
That's probably the same in other states as well. You know, the structure or the way that people buy online, and you know, the high street mall has
Yeah.
changed. So those type of retail assets aren't as in high demand,
Right.
and because the rents aren't supporting the value,
Yeah.
because there's no demand. Like the mum and dad retailer, the shoe, the dress designer,
Yeah.
they're not paying the rent anymore.
Yeah.
So therefore your asset is worthless because it's vacant for longer.
Yeah.
Whereas
That's actually
logistical industrial properties in highway locations that are linked to different routes are going nuts, because it's all about buying online, get it on a truck and get it delivered. They're massive. Those things are going nuts.
Yeah.
So usually, like in Sydney, we look at where the infrastructure growth will be. So that will be like kind of development booming area. In Perth, because I'm not familiar with the Perth market, I'm not sure if there is any infrastructure development ongoing.
Well, the biggest infrastructure change
the
in Perth, no, has been the rail line. So they have the project's called MetroNet, where they've actually developed 2 new lines, one out to Ellenbrook and another one out to southeast, which connects to the Armidale line, which was another 15 kilometres, which doesn't sound like a lot in
So it's
Sydney,
quite far.
but that was massive
Yeah.
in Perth too. So the
And-
connectivity of those train stations and lines have pushed up the growth in a lot of areas. So those things we do look at. So commercial hubs develop, shops, service
develop.
commercial type of things, like the one in Tonkin Park. That was an old asbestos-ridden chemical site that they cleaned out, dug a huge hole, filled it up with sand, and then remediated the whole site, and then subdivided into smaller lots. Train, highway, airport, sat vacant for 2 years, and then just went nuts.
Yeah.
So you're right, infrastructure does deliver that growth.
Because Ellenbrook's quite far. It's about 30 k's. Is it from Perth City?
22.
22. Yeah, it is quite. I used to drive and
So,
it's further.
and you know, those residential properties have increased in value simply because of the anticipation
Of the train,
of the train going there, but it's still not patronised
but you still need a car.
correctly
Most
because
places.
people haven't got used to the idea of getting on the train. So it's a cultural thing that needs to change.
Great question, thank you.
So in terms of your buyer's agent service, is that pay on the milestones? It's 2% of success.
Upon success, yeah.
Upon
So
success.
that's for if you're engaging me to check your criteria, go out and find a property, do the negotiation,
Yep.
do the due diligence, write up the offer, see it all the way through to settlement.
Mhm.
2% is the fee paid upon success. of
And
its
you do pay a
settlement.
retainer at the beginning?
There's an activation fee.
Yep.
For these commercial ones, would have been $2,000
Yeah.
plus GST, or 2,200.
Is that,
As
would
a
that
s-
form part of the 2% or is that on top of it?
that's on top of it.
On top of
So
it?
that's an activation fee, and that's really skin in the game.
Right.
We get plenty of people knocking on our door, come and help me find a property. Yeah, sure,
Yeah.
no problems. But you know, they need to be engaged.
Yeah, absolutely, yeah.
So
But yeah, so the question is whether that's kind of, if it, upon success, do that count towards 2% or not, but it's not.
so with a 10% discount, that's probably negated.
Well, that's,
Yeah.
So it's 2%, and that's on, it's not on the, I understand, so, but it's not on the scale, it's like if we buy a $10 million complex versus, you know.
That's correct. If it was 2% on 10 million, I wouldn't be here because I'd be
Yeah.
retired.
Yeah, that's right.
You know, so the higher you go up, and they were just the examples of, you know, we're trying to pitch to a market, you know,
About $1 million.
you know, we've done $30 million, $18 million assets as well, but that's more at the 1%.
Yeah.
So it is on a scale, but
Yes.
for simplicity of calculation and bearing in mind the market or the audience that we have,
Yeah.
we're trying to target an audience between $500,000 and say, you know, $2 million.
Okay, so is that what these, because obviously if I wanted to engage a service, I'd like to know exactly what we are. Yeah,
Yeah,
what kind
so-
of service it is.
Yeah, so we can talk about our
Yeah.
fees
Yeah.
on a scale.
Yeah.
If it's higher,
Yeah.
we have a sliding scale that I
Yeah.
can provide to you.
Yeah, because obviously, I mean, if this is fixed 2%,
No, yeah,
and we end up buying, you know, something with 400,000, it's not worth your time.
No, well, you can find something for 400,000.
There's nothing
I'm more than happy
400,000,
to have a look at it, but
Yeah.
that's a pretty cheap commercial property.
Yeah.
Just obviously an example, but you know, you can find plenty, even here in North City, there are plenty of vacant office right now. And
yeah.
Yeah.
they're trying
Of
to give it
course,
away, right?
But why would you buy it?
You wouldn't, but I'm just saying that you wouldn't be
And,
willing
and I
to.
guess that's where that consultation comes in. You
Yeah.
come into my office or we
Mm.
do a Zoom call
Sure.
and we talk about your criteria.
Yeah.
And say, you know what?
Yeah.
Good luck. But you know, we're probably not going to find a good quality asset because we could never recommend
Mm.
something like that as a quality asset.
Right.
But you're like, you're correct. Like a sliding scale, like 2% is on the basis of the average deal size
Sure,
we see. But everyone's very different, and that's through the conversation with Ben, and the discount will apply.
But when you buy a property, you're going for another agent? Or you come to the owner, how do you know what properties to buy?
Well,
If you go for a real estate agent, he's getting a cut as well, commercial real estate agent. So,
how does that work?
well, if you go directly to the owner, if you knew the property was for sale, sure you can charge a percentage there. But if they advertise for another agent, you can't
No,
go behind their back.
But the agent sale works for, the seller pays the fee for that.
This-
Yeah,
Yeah.
I think.
Yeah.
Yeah.
Oh,
Thank you very much.
Yeah,
Thank you
that's
very
true,
much.
that's true. Oh, right,
Yeah.
oh, right.
Yeah, yeah.
You're right, sorry. No, back to property. Yeah, you're the buyer. That's right. That's right.
I'm just conscious of time, and for those on the call, for those who are still in the office, you know, we're able to chat to you about some off-market opportunities that might be of interest as part of the overall service that that Ben and the team have. Naturally, they're all part of the overall service, but that's probably more of a reason to stick around and have a chat. If you've got further questions about you know, what Ben and the team can offer in terms of growing your property portfolio through WA and beyond. So with that being said, a reminder, you know, for anyone that's looking to invest in commercial properties and mortgages, your partner with that, both on the funding side as well as the asset side. And if you even just want to have a general chat about what it could look like, our details are here. We've also got a final slide with all of our details there, so you can contact either myself, Jocelyn, or Ben. But I'd like to thank everyone for joining this evening. A big thank you for Ben for joining us from Western Australia. We really hope this has been insightful for all of you, and it again speaks to our whole premise of making sure our clients are getting the best possible market insights and capabilities to help them essentially grow wealth through property. So thank you very much, and we look forward to chatting to you soon.
Thank you.
Thank you.